traders, welcome to the TMT Stock Market Strategy video for Thursday, September 29th. Okay, so we had the Fed last week propping up prices and buyers of dips coming in and propping up the market. And then we had OPEC yesterday agreeing to a freeze reduction in output of oil. That hasn't happened in 8 years, and the market liked it and rallied the market into the close from actually being down on the day. So very, very bullish. The markets are one-sided, and it's going to end very, very badly. And that's how it happens when you have everybody one-sided, just buying dips, not worrying about it. I do believe, that's what's to come. I see that in the charts. I see what's happening as far as sentiment's concerned. There's every time the market pulls down a little bit, buyers of dips come in and buy the market, and they do that until it doesn't work. And when it doesn't work, you'll have 2 or 3 big down days that wipes out all of their gains for the year or the quarter. So you have to be very, very careful here. This is a dangerous market if you don't know what you're doing. And to me personally, when you see something that's just when I was watching the price action yesterday, when the OPEC, it was just a frenzy of buying, and it rallied for the first 15, 20 minutes. Then it kind of consolidated pretty much most of the day. But just crazy, crazy price action, guys, from being down, up. And, gap up days, and you don't get any pullbacks. And then when you do get a pullback intraday, they rip them up to run the buy stops and the sell stops. And it's a very manipulated market by the federal government, and everybody knows it. That's a professional that's been trading it. You can see it in price action. But after a while, that starts to subside. So you have to be very, very careful. Um, the trend is up, and whatever the trend for the day is, you need to stick to that trend, and that's what happens. That's really what comes down to it. If you want to play it safe, the market is up, and even though we're at elevated levels, you still want to be looking to buy at key areas of support. You want to be high probability in your trades, and if you don't see a setup, step away and wait for that to happen. Okay. All right, so let's get right into it. Just wanted to show you guys the WTI chart, which is the light crude oil, West Texas Intermediate crude oil here in the United States. There's a couple of patterns that are working out here. 50 is the neckline of an inverted head and shoulders, but I don't like the pattern when it's way up here at the top. If the inverted head and shoulders was here down at the bottom, it would be a more explosive pattern and it'd be more reliable. I don't like it that it's here at the top here at this first move up higher. Not that it can't work. It's just that you'd have to be cautious about the breakout. 50 is a big area. You have your left shoulder, your head, your right shoulder, and within this head and shoulders pattern, we have a symmetrical triangle that just confirmed yesterday's breakout. So we need to see oil stay above this uptrend line here, this slanted uptrend line on the symmetrical triangle for at least another day. I believe that the oil rally is going to be very hard to sustain. We all know, everyone knows that there's millions and millions of barrels of oil. Everybody's finding oil. We have new technology. There's tons of ships that are floating out there with millions of barrels of oil that can't get to a port to park it. So there's so much oil out there. So a lot of it is a lot of manipulation. And I do think OPEC lost its credibility, or I should say its strength, from back in the 70s, 80s, and early 90s. They're not as strong as when they say they're going to cut this and that. You also have a lot of other nations that need oil to be produced, like Iran, Nigeria, and here in the United States, we're pumping astronomical amounts of oil. So I think it's going to be very hard to sustain. I see, even if you get to 50, 52, 55 would probably cap any type of rally, and that would be pretty much it for the rest of the year, and even going into 2017. I don't think you see at all anything above $55 oil pretty much for a very, very long time. Now, I'm a trader, and I am not a fundamental analyst at all, but from what I'm gathering and what I put together, I would be very comfortable of fading any rallies in oil as well, as long as I get the sell trigger. If we can roll back into the symmetrical triangle and lose this lower end here, this lower end of 45, I would love to short this down here, right down to the 200 or $41. Now this is oil itself, okay? Now let's take a look at UWTI, which is a triple. It's going to be a little different pattern because it is a triple, and if you can't hold any of these triples at all because they deteriorate, they have contango issues. You have to understand the instrument that you're trading, okay? Great day trader, but I wouldn't trade this. Maybe a day or two, but I wouldn't hold this at all. And even when you're trading gold like the nuggets and the dust, stay away from those triples if you are holding them. Unless you can pick a spot and you get 2 3 explosive days, then it does pay off. Okay, but here's a UWTI. You could see here different pattern. Right, we have a nice big bull flag pattern here. So and it broke out, but just tagged the 50-day moving average. It's going to need to break back above it. Give me another day, and then if anything, we'll challenge the swing high here. Okay. Next is going to be TLT. I'm really liking this on the short side, guys. This is ripe for a short sale. We filled the gap here. We're back above the 138, which that neckline from that descending triangle. So I'm looking for lower prices in TLT, and rightfully so. When somebody had mentioned to me, oh, rates are rolling back down again. Sure. I mean, coming off of that ascending triangle, it is going to take a breather and hopefully pause and then pop in rates. I believe rates are rising. Rates are going to go much higher than you've seen in 2016. I think you'll see a generational low. If that's the case, then the bond market will definitely start to sell off. As you know, rates up, bonds down, bonds up, rates and vice versa. Okay, bonds go up, rates go down, rates go up, bonds go down. So it's inversely correlated, as we all know. So keep an eye on the TLT. I'm really liking that short. GLD, again, I'm looking for a flush of all the weak hands to come down into the 120 area, and then I would start looking to reevaluate GLD as a long trade. I do think that gold has reached a new phase of a bull market, and I'm watching that closely. GDX, you can see, did have a better day than gold itself, coming off of this nice little trend line here, but you could see it's not strong. There's no strength in any type of push or any type of rally in these indicators here. So I treat this as suspect. I'm looking for a flush back into this area here. I would love to see 1920 in the GDX here. Next is going to be the spiders. And if you guys can look at, and if you take your time and take a look and pause this video, you'll see we had 2 days down, 2 days up, 2 days down, 2 days up, and go back and you can see there has not been a 3-day consecutive down day in a very, very long time. You may have had one back here in May, but aside from that, it was probably last year. And this is the manipulation that goes on that you've never seen. Like we talked about this, we haven't seen a consolidation of almost 3 months since 1995. Um, Going back dated 1995. It's insane that you can have that. Now we have an election year. I understand that we have election cycles. That's very, very bullish. But just remember, October pre-election is the most notorious for having a very down month. Better than just a regular year without an election cycle, but it's notorious. Now, nothing has happened, right? August is bad, nothing happened. September is bad, nothing has happened, right? Other than that big down move that we had, but we really pretty much caught the rest of that move back up, other than, of course, back up to these highs. So just be careful. I don't like to see everybody so bullish. That really scares me as far as because I never want to see anybody get hurt in the market. Just getting long and getting long up here. Okay, let the market flush, let the market consolidate, let the market pull back, and then you can add to your longs in your IRAs, your 401ks, whatever your account is for your long-term trading. All right, 60-minute. You can see here, guys. Take a look at the premium video. $49. We're running a special soon. That'll go away eventually. Take a look at it. The subscribers are doing fantastic. We know when to trade, when not to trade. You can see it clearly here. Just want to show you. This is 60-minute. We drop it down to a 15-minute, 10-minute chart, and we want to show you when is the proper time to trade and what zones and what areas to trade. Okay? So this is that 60-minute chart. Here's the transport. Just want to show you where we are here. If the transports can pick up steam and take out the swing high here, then we may have something going to the upside. But we need more evidence. Okay? IWM Russell filled the gap finally, as the other ones did. Let's keep an eye on the Russell. Let's keep an eye on any pullback. I would watch oil today. There's a lot of Fed governors speaking as well, because oil gave us the pop yesterday. Let's see if it gives us the drop today. Okay? And last is going to be the Qs. You can see here we had a little bit of move up. I'm watching also some of the big cap tech, especially Amazon. Amazon is so ripe for a big pullback. Again, you don't want to short the beast. It is an animal. You let it sit, you let it wait. I just like to watch it to see where when and where this market, where Amazon leads to, if it goes to new highs yet again to 1,000, or does it start to break down here again? But there's no evidence of breaking down. Just sharing that with you, just to look at it. Keep an eye on some of the big caps like Google's, Amazon's, Tesla's. Those are the guys that are running up the market here in the Qs. All right, guys. Have a good day. A little longer video. I apologize, but I want to get my thoughts out to you guys. Take care.